Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video recap that we do here each and every night on the membership side of our blog. So what we're going to go over tonight is we're going to talk about the trade that we made in Pfizer. So let me just adjust the screen here for you guys. And Pfizer is a really interesting case because this is a trade that we put on that was an earnings trade where we anticipated that Pfizer might shoot higher after earnings. And the stock actually went completely against us right from the bat. And we were very quick to hedge the trade. And now, coming full circle, that hedge has actually really worked out in our favor because we were able to actually close the trade out at a small profit today, which really is a huge win because we could have had a full loser. So I want to go over this trade in detail. And since it's our only trade today, we're going to cover it in a little bit more depth. So the actual trade that we closed out today was actually an iron condor that we had legged into. So it was actually two different orders that we entered to get out of it. And that was that we bought back the put side of the trade, which was the 30.29 puts for 43 cents. And we bought back also the call side of the trade, which was the 31.32 calls for a 7-cent debit. Now, at the end of the day, after all of the credits that we received for both of these, including the hedge, and getting out of them at $43 in debit and $7 in debit, we made a nice, huge, just kidding, profit of $5. But again, it's not about the money that we made, it's about the money that we saved by being a little bit more nimble and strategic about how we hedge our positions. So again, we'll go over that in detail. All right, so I want to go over and just switch over to the emails real quick so that you guys can see the actual emails that went out to our members. So I have here just the emails that went out to our members and the dates and times and all that information. So you can see starting with the most recent one, or the first one that we had actually originally entered the vertical, the Pfizer 30.29 put spread. We had originally entered that on 5/2. So this is the day before earnings came out, before that weekend. So again, anticipating that the market would go higher, we entered a put spread below the market. Now, if I switch back over to the chart, you can see on the chart that that day is actually right here. So this is the day before Pfizer had earnings and gapped lower. So we were obviously very close to the market, but again, conservative, being that our first strike was at the $30 strike or 30 price point. So we gave ourselves a little bit of room between ourselves and the market, and Pfizer made a huge move after earnings were announced and gapped lower and then continued to move lower on 5/5. So what we did is, since we only had that put spread in the market, is we went back and we sold as a hedge that vertical call spread against the market. So even though Pfizer moved down against our position, we went back in and sold the 31.32 call spread above the market to take in a credit. Now, as I always say on hedges, if you add the same or take in your hedge the same number of contracts, so you match or mirror the other side of the trade, so we sold 7 contracts here and 7 spreads here, and you match the width of the strike, so just $1 wide on the top side versus $1 wide on the bottom side, you're actually not taking in, or you're not having any additional risk than you did with the original position. So by making this hedge, all we are doing is taking in this nice big credit of 20 cents, which helps move our break-even points out further, which obviously you can see from the closing trade today really worked out in our favor. So at the end of the day, we really had a very tight range that we were looking in between about 30.5 and about 31.5 is really where we needed Pfizer to trade, and obviously we needed implied volatility to go down. So even between that range, you can see that Pfizer, even after our hedge, continued to move lower. So our trade was basically in the money and practically at a full loss for the better part of May. And we've been holding on to this trade for a long time. And you can see that it just kind of wiggled around here down in the low 29s. Again, pretty much a full loser. We still took in a lot of credit, but leaving hope that we could see an opportunity to get out of the trade at some point in the future should Pfizer jump back up. And if it didn't, even if it didn't, we still reduced our loss by adding that credit on the other side of the trade, because again, we had traded the 31.32 call spread, which is all the way back up here where the stock originally was before earnings. Now, since then, obviously Pfizer's had a nice little rally off the base, and then today implied volatility dropped a little bit, which obviously helped the overall position, and we finally saw the stock kind of move into the territory that allowed us to get out of that position with a very small profit but no loss on this trade. So again, going back to the emails, you can see the 2 emails that I sent out today that are posted inside the membership area, getting out at the $7 debit and then the $43 debit on the put side. Now, the whole moral of the story is that you have to be, again, aggressive with your adjustments. If the stock moves against you, don't be timid in thinking that it might just turn around. You have to take in that extra credit, take in that extra premium, which only helps reduce your risk and increase your chance of making money on the trade because you're taking in extra premium and moving your break-even points out further. So this is a really, really good classic example of adjusting a trade after earnings have happened so that we take a trade that looks like it's going to be a full loser across the board, but not panicking. We actually turn this into basically a scratch trade or a very small profit trade. So to me, this is really what the essence of trading is and being successful at trading is. I'm really happy when this happens, even more so than the trades that actually just make money right off the bat, because I know that if I can do this enough times where I take these trades that should be losers in most traders' hands and kind of mold them and shift them into a profitable trade or a small loser or a scratch, then that to me is really the essence of trading. So again, I really hope you guys enjoy these videos. Please let me know if you have any comments or questions about this Pfizer trade in particular. I'll get back to all of those today or tomorrow before the open, and happy trading.